everyone. I'm Michielle Freeman, Realtor with Edina Realty.
I'm Steve Mohabir, loan officer with Edina Realty Mortgage.
And you're watching Tea Time Tips. How's it going, Steve?
Great. It's great. Market's heating up. Spring is here.
I feel like market is not just heating up. Like I feel it's at a full roaring boil right now.
Yes, there is that too. Yes, for sure.
I find it very fascinating that we still have an inventory shortage. Like there's still more buyer demand than we have inventory to fill it. And it didn't really dawn on me until the last couple weeks when you were like, yes, you know those houses that you're writing on and those townhouses? Yeah, I'm writing more than one pre-approval letter for those. So and I was like, yeah, okay, that says a lot. I mean, because you're one great loan officer, but you're one great loan officer. And I'm like, if you're writing more than one, and it was kind of like not what I would consider in my immediate market, you know, over in Woodbury.
Right.
That speaks volumes. So I was saying to some other clients as we're trying to navigate this very competitive market that last year I feel like the hot topic and the hot go-to thing was to waive an inspection. And this year I feel like the appraisal gap coverage has become even more important than a inspection. So just wanted to get your take on that and kind of what you're seeing, you're thinking, if it affects, can all different types of loan programs that you offer and packages do appraisal gap coverage? Like, yeah, what do I need to know?
It's a great question. So let's start out with what is appraisal gap coverage, right? So if an appraisal comes in low, which currently I think our appraisals are at about a 95% clip of not coming in low or coming in at price or above, which is great because there's a fair bit of closings going on over the winter and things. So we get that, but from an appraisal gap coverage. So an appraisal gap is, let's say a property's $400,000 and we go get an appraisal and the appraisal comes in at 380. We have a $20,000 problem to solve is the way I look at it, because your financing is based on the lesser of your purchase price or appraised value. So if you were going to put 20% down on 400,000, you were looking at an $80,000 down payment. Well, now your 20% down is on 380, plus your contract says you're going to pay 400,000 and you're going to make up the difference in that appraisal gap. So your down payment is up 380, so 20% down of 380 is 72,000, plus you're making up the difference to that 400,000. So now your down payment instead of 80 becomes 72 plus 20, which is 92. So that is the appraisal gap in general. But there's a few ways to combat that and how to work with that. So if you have a larger down payment, call it 20%, you may not need to change any of your financing and bring the same dollar amount you thought. So if you wanted to bring that 80,000, we manipulate the loan a little bit and say, okay, instead of 20% down, we look at 15% down or something to that extent, and just change your down payment. Maybe look at buying off mortgage insurance or paying a single premium at closing for mortgage insurance, because mortgage insurance got much cheaper over the years, so it's not as scary as it once was. But basically,
just to pause there. So you need mortgage insurance for if you're putting less than 20% down. Is that
some form of it? Yeah. Okay. So some form of mortgage insurance, whether it be monthly or a higher interest rate to cover, yes. So 20% down or less than 20% down. Typically, there's mortgage insurance. But the appraisal gap in general, does it make sense? And can we work with it? Can we get a loan still that makes sense for your parameters? what I ask every client, right? So we want to make sure they're still comfortable, and we know what we're doing. If you're, in the higher price ranges and you have a big appraisal gap, and maybe you're talking $1.5 million purchase price, and the appraisal comes in at $1.3 million. Now you're having a very different conversation, probably, because that's a $200,000 gap versus a $20,000 gap. Not to take away that that's not a big deal either, but it's more money, right? More money and more discussions about it. But we're seeing a ton of it in written in and asking about it. So it's definitely an item of conversation to have.
It's interesting because I'm seeing it becoming important in sellers' eyes because, I sort of describe right now that buyers are very emotional. They're very competitive. They are just throwing everything at the kitchen sink, but the kitchen sink at their offers. And they are going well over the list price. And, a lot of my sellers are like, well, that's great that they offered me $40,000 over, but like, what happens if it doesn't appraise for that? And so I've just really, I've shared that information with the buyers that I'm working with, that definitely, like, more often than not right now, I'm saying that inspection is not important to my sellers. Like, they'll go through the inspections. I know a lot of buyers are writing pass fail inspections or non-contingent on the inspection, but they still have one. They just want the information. But yeah, the appraisal gap language is important. Is there anything that you as a lender like to see or don't like to see in the appraisal gap language?
All offers are so very individualistic, right? And we got to talk through a lot of part of that, and that's what you do the best. So it's really making sure they understand what they're writing, right? Because if they don't, then it's not a good offer from our perspective, right? So making up an appraisal gap, waiving an inspection, what does that mean? I think the number is about 10% of transactions with 20+% down in the conforming loan market, which is under 647-200, are getting appraisal waivers. So that's the other piece. So can we get an appraisal waiver on this property and not even worry about an appraisal? Or we could write in a $600,000 appraisal gap because you don't need an appraisal. So
and can we get that information beforehand or not until we're actually in it?
Not until typically we're under contract, but we tend to have a good idea if we know the seller has a mortgage with Freddie Mac or Fannie Mae. So there's some questions we can ask to help us, but we don't know for sure.
Got it. All right. Well, this is great information in this competitive market. I literally want to go on camera and just say thank you for the work that you put in the last couple of weeks ever since we've been working together, but especially in the last couple of weeks. I know that you and I are not getting a whole lot of sleep right now because
you're welcome.
Market, so I appreciate you.
You're working just as hard as me. So
it's true.
If you're asking for something on a Saturday night at 9 o'clock, that means you're working then too. So
yes, it's true.
Try to do our best.
I put in 57 hours in 4 days in the last few days. So yes. Well, I appreciate you. Thank you for all the great information and discussion. You do make my life easier. So I truly am grateful. I'm Michielle Freeman, Realtor with Edina Realty.
I'm Mohabir, loan officer with Edina Realty Mortgage.
And you've been watching Tea Time Tips.